Hello everyone, welcome back. Today we are going to look at 3 defensive dividend stocks to consider. It's November 2021. The stock markets are at an all-time high and we could see some turbulence just because I don't see any bad news out there. So sometimes what I like to do is take some profits and maybe go into some stocks that might have been flat during the market increase because it might protect me on the downside. We can see here in the screen that 2 of the names will have close to an average of 60 years of consecutive increases in their dividend. Now that's a huge deal because that's important in all markets. The first name we're going to start with is Procter Gamble. Now you ask, sounds familiar. That logo looks familiar. Procter Gamble, P&G. Oh yeah, if I look anywhere in my house, I'm going to see something they have sold me. They have a 2.39% dividend yield, 65 years of increasing it every year during those 65 years. So I think we're going back to the 40s is what I think, or the 50s, something like that. Maybe 1950, post-World War II era. What does Procter & Gamble sell? Well, here's their webpage. What are their brands? It's looking familiar. You name it, they sell it. Starting with Pampers, yep, baby diapers, Bounce, Cheer, Downy. So if you do laundry, you've probably got their products. Tide, Gain, Bounty, Charmin. Oh yeah, toilet paper. Now, in the pandemic, that was the hottest commodity out there. So I think this is a pretty boring investment and a boring business, but those are the safest places to be when things are as high as they are right now. We've got some hygiene products, men and women, grooming there, hair care, Head and Shoulders, herbal essences, deodorant. So when we look at all these products that are on the shelf here, no pun intended, instead of asking what is Procter & Gamble involved in, well, there's Gain, there's Mr. Clean. It's easier to ask, what are they not involved in? Okay, Crest. So during any recession, I'm pretty sure we all still brushed our teeth, used our mouthwash. I don't see a lot of risk. There can be volatility, but these are names that I can probably sleep easy at night with. And the list just keeps going on. So they have way too many products, probably. If we look at their stock history, well, we're going to see it's a 2.39% dividend. At current prices, it's $145 as of today. Where does it show our screen? The day ended November 4th, 2021. But you do notice is roughly a year ago, they were at the same price. They've gone up and down, but this kind of gives me a little bit of confidence as, hey, they're not overly expensive. Here's our 5-year history. Yeah, they did double over that time, but here's a nice one. 40 years, going back to 1981. It's had its ups and downs. I think that was a tech crash back in 2000. We've had this huge growth, but again, if I'm looking shorter term here, it's priced where it was a year ago. You get that dividend, and in case markets pull back, maybe we actually protect ourselves a little bit on the downside. So the next name we're going to look at is another familiar name. They're actually a competitor to P&G is Johnson & Johnson. Again, household consumer product. A little bit higher dividend yield, 2.58%. It's not a huge dividend, but it's one that grows. 59 years of consecutive dividend increases. So that's a long time, 6 decades. Means if you bought this stock, 20 years ago, that dividend's probably doubled. It's had a steady increase. And again, we'll look at the product page as we skip over to the J&J page here. Again, we're going right to their website. Maybe not as big of a product line, but the usual suspects. Tylenol, Reactin, Benylin, Benadryl. So pharmaceutical products, over-the-counter. Listerine, we saw Scope on the other company, and now we're seeing the competitor Listerine. Band-Aid. So all those boo-boos for the kids, yeah, these are who you're buying it from. So again, not as extensive here, but it's still a staple with their history of dividend payments. And when we go to the J&J stock, we're at about $64. That's where it was in January. A little bit lower November of 2020, about only $20 higher. But when you see some of these other names 30-40% higher, and this thing is off its peak by about, I don't know, 10% or so, I'm okay. I see the 2.5% dividend yield down here, and to me that screams reasonable value in an expensive market. You can see the last 5 years, yeah, moderate growth. I wouldn't call that huge growth, but it's moderate growth. And this is where COVID, the pandemic, actually hit. We're only a little bit above that nearly 2 years later. And again, you got your 40-year history here. So these things have gone up 70-fold in that time, maybe 80-fold on this one. Again, so very good names to be in. I'd say they're steady. They're not immune from volatility, but you can pretty much hold them for life and you wouldn't be disappointed. Last but not least, Visa. The smallest dividend yield we do have out of our list of three, but I do believe there's room to grow. And same story, the stock is off its peak, kind of flat for the past year, although it's had a bit of a bumpy ride, but it's a business that in order to buy all those products, you're probably using your Visa that we discussed on the other page. So when we switch over to the product shelf here in the last year, yeah, the stock was roughly where it is now. If you go back, so depending on the day you look in the next week, small dividend yield, but pretty stable. I mean, it went up as high as $240 or yeah, 250 we peaked at. We're $40 below. We're almost 20% below the peak. And to me, that means, hey, we've already had a correction in the stock. Pretty steady for the last 5 years, more than doubled. You're probably going to see quite the history here from 2008. Well, that's a massive increase, over 15 times just in the last 12 years, 13 years. So it's been steady. They're growing their business. They've got the biggest market share of all the credit card companies. So you don't really go wrong with a Visa here. And I say in these expensive markets, these are the three names I think you can hold, even if the markets are going crazy, double down on and put your head in the sand until all the noise clears and you'll do well. So once again, thank you very much for joining. If you found this content useful, leave a comment. If you have questions, hit that subscribe button. This way we will be able to get content out to you. So thank you very much, and we're done.